And the upcoming week is a major one for the global markets. Will the Federal Reserve hold steady or make a move on interest rates? With inflation, tariffs, and economic uncertainty in the mix, all eyes are on what happens next. We will tell you what to watch out for, what it could mean for your wallet, and when changes might be coming in this special report. Take a look.
The Federal Reserve is expected to keep interest rates unchanged at its policy meeting this week. Markets predict the rate will stay at 4.25% to 4.5%. This would be the second straight meeting with no changes. Fed officials are waiting to see how Trump's tariff policies impact the economy. His tariff plans could raise inflation or slow growth. Interest rates have stayed high since 2022 to fight inflation. The Fed began cutting rates late last year as inflation cooled. But a recent inflation spike and policy uncertainty have put further cuts on hold. The Fed will release its economic projections alongside the decision. Analysts expect officials to predict just one rate cut this year, down from 2 in December. Recession risks remain a concern. Consumer confidence is falling, and spending has slowed. However, job growth remains strong, and inflation recently eased. Goldman Sachs has raised the chance of a 2025 recession from 15% to 20%. Tariffs could complicate things. If they raise prices, the Fed may keep rates high to control inflation. But if they slow the economy, rate cuts could be needed. Markets expect the first rate cut in June, but uncertainty remains high.
And to discuss more, we are now being joined by Mithali Nikor. She is an economist and the founder of Nikor Associates. Thank you so much for joining us this morning.
Thank you so much. Good morning.
Well, let me start by asking you, with the Fed expected to hold rates steady, what, according to you, are central banks around the world expected to do?
So I think at this point in time, all of the monetary market players around the world are adopting a kind of wait and watch approach, because the kind of uncertainty that we're seeing playing out in the equity markets is actually rattling a lot of investors and is creating a lot of a crisis of confidence, if you will, even in US and dollar denominated stocks, because we've seen that nearly $5 trillion worth of value has been wiped out from US stock markets in the last week. And also, I think what is very evident is that central banks are also watching what happens when the full extent of the Trump tariffs are felt, and once they're sort of put in place after the 2nd of April, and if they even come into place. So I think with all of this uncertainty playing out in the global economy, in a way fueled by American actions, central banks around the world really adopting a waiting and watch approach to see how can they respond. And at this point in time, it's actually better for a do-nothing kind of scenario to play out, because if they need to cut interest rates, if there is a recession that hits their economies, then they need to have the room to do that in the months going forward.
And we're talking about specifically India. If the Fed hold rates, what kind of monetary policy can we expect in India?
So as you would have observed, in February 2025, India cut rates for the first time in 5 years. And of course, this was because this was the first time in 5 years that the Monetary Policy Committee was actually comfortable with the inflation rates and the slowing down of inflation finally, in a post-COVID scenario. And of course, that's because a lot of investments in supply chain strengthening are actually paying off for India right now. And these are actually domestic factors which are slowing inflation as opposed to global factors. However, India is no longer immune to, kind of developments that we're seeing across the world. A large exodus of foreign investments has taken place from the Indian equity markets, particularly foreign institutional investors really running out of a lot of emerging markets, including India. So in such a scenario, if India experiences a slowdown in its growth, then again, the RBI will need more and more room in order to cut interest rates in the coming quarters. But in April, I don't actually expect the Reserve Bank of India to cut rates immediately, even though growth is slowing down and inflation is stable, just because of the amount of uncertainty that's there in global markets. I do think even India will adopt a wait and watch approach.
Right, and talking of RBI, if the RBI holds rates higher for longer than expected, what kind of impact will that have on the Indian markets? Is a rate cut really a positive trigger event after the recent corrections?
So I think the rate cut that's happened in February, we're still waiting for it to fully play out in the monetary markets, because only few banks have actually passed on the impact of that rate cut to consumers. I mean, it's only a few of the large banks that have actually revised their lending rates. So I think in the coming weeks we'll see more and more commercial banks revise their lending rates, and therefore to that for that to play out in the monetary markets. But at the same time, when we look at the Indian growth slowdown, again, I'm saying growth slowdown because we're still growing fast and we're still the fastest growing economy in the world. But at the same time, we see that tempering of growth. I think a lot of that is to do with the global uncertainty and the global consumer confidence. Because when we look at consumer confidence in developed markets today, it's at its lowest level since several decades. And a lot of the Indian market and growth actually comes from exports, comes from investments of these foreign, companies in Indian manufacturing and Indian services. So this global growth slowdown is what is actually tempering down India's growth as well, as opposed to more domestic factors.
All right, we'll be closely looking at the cues to watch out for. Thank you so much. This was Mitaya Nikor joining us and giving your perspective. Thank you.
Thank you.